takeover court. So today in this session we are going to complete part number 1, which is about raising of capital from the capital markets. So first one. So here we are going to discuss about public placement. What is meant by public placement? If a company want to raise money from public by issue of securities, then it will be called as public placement. So company will raise money from whom? Public. Okay. For that money, what company will do? Company will issue securities. Okay, whenever company want to go for public placement, it need to issue prospectus. So here issuing prospectus is invitation to offer, and applications from public is nothing but offers, and allotment of securities is nothing but called as acceptance. Okay, then when prospectus will be called as red herring prospectus? So in order to raise money from the public, company is having two options. One is fixed price method, other one is book built method. So what is the difference between fixed price method and book built method? So in case of fixed price method, company will issue securities at a rate which is already fixed. Then who will facilitate in fixing that price? Merchant banker. So for every activity, who will facilitate the services? Merchant banker. Okay, next one. Then what about book built issue? So here price range will be provided with minimum and maximum prices. Say for example 600 to 630. So this is price band. So price range is called as price band, and 600 rupees will be called as floor price. Okay, next one. Now based on the demand levels, they will fix an amount which is in between 600 and 630 rupees. Then who will assist in fixing the price here? Syndicate members. Then who will appoint syndicate members? Merchant banker. Next one. So post subscription, so collecting application money, allotment money, call money, allotting securities, or giving refunds of money if securities are not allotted. So all these things will be taken care by whom? Registrar. And who will appoint this registrar? Merchant banker. He is not ROC. He is not ROC. So he is the registrar who belongs to depository bank. So he will maintain all digital records. Next one. And for the entire process, you need to comply with certain rules and regulations. Now, merchant banker will appoint one more person called as compliance officer. So what is the role of compliance officer? He need to verify whether all the rules and regulations are complied or not. And he need to report to whom? Merchant banker. So all these people will be called as intermediaries, who is appointed by merchant banker. Next one. Then when red herring prospectus will be called as final prospectus? First of all, what is meant by red herring prospectus? It will contain each and every particular about the company. But when company want to issue the securities on the basis of book built method, the price will not be fixed at earlier stage. So except price, everything is provided in the document. Then it will be called as red herring prospectus. When price is added to it, it will become final prospectus. Next one. And how many days you need to provide to the public in order to subscribe for the securities? Minimum 3 days, maximum 10 days, 3 to 10 days. So in LIC example, how many days they provided for subscription? 6 days. Okay. After 10 days, they need to close the subscription, and if they want to allot security, they need to allot the security within 15 days. If they want to refund the money, they need to refund the money within 15 days. So who will take care of it? Registrar, who is appointed by merchant banker. Next one. Then which companies are eligible in order to issue securities to the public? So for this purpose, there will be separate eligibility, which we need to read it now. That is nothing but question number 1. Next one. So what kind of securities can be offered to public? Only two categories. One is equity shares, other one is convertible securities, which includes convertible bonds, convertible preference shares, convertible debentures. సో మీకు ఇది ఈపీఎస్లో కూడా వస్తుంది. ఐడియా ఉందా? ఈపీఎస్, ఎర్నింగ్స్ పర్ షేర్ ఉందా? అసలు కంప్లీట్ అయిపోయిందా? ఇంటర్లో అయినా ఉంది కదా, చెప్పండి. వీటిని ఏమని పిలుస్తారు? కన్వర్టబుల్ సెక్యూరిటీస్ని. ఈపీఎస్కి ఇంకొక ఎర్నింగ్స్ కూడా ఉంటుంది, డిపిఎస్, డైల్యూటెడ్ ఈపీఎస్, నథింగ్ బట్. సో దానికి డిఫరెన్స్ ఏంటి? బేసిక్ ఈపీఎస్, డైల్యూటెడ్ ఈపీఎస్, వాట్ ఆర్ ద డిఫరెన్స్? బోనస్ షేర్స్. సో in case of EPS, you will take total earnings divided by outstanding shares. So this is nothing but called as basic EPS. What about diluted EPS? So you will take total earnings with some adjustment and divided by not outstanding shares as well as future shares. So future shares akkadi nunchi vastayi because of this convertible securities. Idea vachindi evarkaina? ఎందుకు ఇప్పుడు అది? ఓకే. సో విచ్ కైండ్ ఆఫ్ సెక్యూరిటీస్ కెన్ బి ఆఫర్డ్ టు ద పబ్లిక్ హియర్? ఈక్విటీ షేర్స్ యాజ్ వెల్ as convertible securities. So next one, and public means who are covered here. So here some private portion is covered, some public portion is covered. In private portion, who will be covered? Promoters, anchor investors, and finally reserved people. Next one, in public portion, who will be covered? Retail individual investor, RII. Next one, NII, non-institutional investors, who are nothing but high net worth individuals. Next one, QIB, qualified institutional buyers. Then who are promoters? People who form the company. Then who are angel investors, anchor investors? So who will promote this book built issue of IPO or FPO? Next one, Rakesh Jhunjhunwala. Next one, who is reserved people here? Employees or public? Next one, who is RII and who is NII? Both are individuals only. But in case of RII, they can invest up to 2 lakhs only in IPO or FPO. Then what about NII? So they can invest more than 2 lakhs. Next one, what about qualified institutional buyers? They are not individuals, they are body corporates, artificial persons, and they will do investment business. So that's why they are called as qualified institutional buyers. Now open question number 1. So what is the eligibility conditions for the public issue and right issue? So first of all, what is meant by public issue? Issue of securities to entire public will be called as public issue. And what is meant by rights issue? Issue of securities to existing shareholders at a discounted rate. So it will be called as rights issue. So discount means it may be a discount to market value but not to face value. So face value discount is not allowed in India, but market value discount is allowed. Say for example, share face value is 10 rupees and its market value is 100 rupees. Now if you want to issue securities, then you can issue securities with a minimum of 10 price. Then what about 100 rupees? Possible. Then what about 100 rupees? It is also possible. What about less than 100 rupees? It is also possible. But that amount shall not be below 10 rupees. That is face value. That means discount at market value is allowed, but discount for face value not allowed. So for public issue as well as right issue, the eligibility conditions are same. First one, issuer. Issuer means company or its promoters. That means who form the company or promoter group. Nothing but All promoters together will be called as promoter group. Directors or selling shareholders. Selling shareholders means, that means it is nothing but OFS, offer for sale. So in case of OFS, existing shareholders will sell certain shares to the public through IPO or FPO. So those shareholders will be called as selling shareholders. So in morning example, that is LIC example, who is the selling shareholder? It is President of India on behalf of Government of India. Next one. Now the point is, if the company or its promoters, any of its promoter or promoter group as a whole, or directors or selling shareholders are debarred from what? From assessing the capital market. Who debarred them? SEBI. Now those companies cannot go for public issue. Those companies cannot go for rights issue. So which companies cannot go for public issue or rights issue? If the company or its promoter or group of promoters or directors or selling shareholders are debarred by whom? By SEBI. From what? From assessing the capital market. What is meant by assessing the capital market? Nothing but investing in the stock market. So if they are debarred by SEBI from investing from the stock market, then the company is not eligible to go for public issue. It is not eligible to go for rights issue. So that is the first point. And this point is repetition. Just strike it off. Not entire point. Only from or. So first point, అందరికి అర్థమైందా? So if any of these people are debarred by SEBI from assessing security market, then company is not eligible to go for public issue or rights issue. Next one, approval for listing. So in morning example, that is LIC example, LIC made application for listing with 2 stock exchanges. So what are those 2 stock exchanges? NSE and BSE. Now both stock exchanges need to give permission. And one more point. Now there is more than one stock exchange. So what company need to do here? Yes, it need to appoint one stock exchange as designated stock exchange. The same point is covered here. So in LIC example, what LIC did? So it kept BSE as designated stock exchange. Now second point is also completed. Next one, dematerialization. So what is meant by dematerialization? Converting physical securities into dematerialized securities will be called as dematerialization. So dematerialization is nothing but a process which will convert physical securities into dematerialized securities. Okay. Now for this purpose, the company need to make an agreement with depository bank. How many depository banks are there in India? 2. Next one. So what are those banks? NSDL, CSDL. So now company need to make an agreement with depository bank in order to convert all its physical securities into dematerialized securities. What happens if this agreement is not there? What happens if they want to maintain them in physical form only? Then they are not eligible to go for public issue or rights issue. Next one. And what about partly paid shares? So what is the difference between fully paid shares and partly paid shares? Say for example, if the issue price is 10 rupees and only 8 rupees amount is paid, then they are called as partly paid. If 10 rupees amount is paid, it will be called as fully paid. Now the point is, if shares are fully paid, all the existing shares are fully paid, then the company is eligible to go for public issue or rights issue. What happens if shares are partly paid shares? Now company has 2 options. One is to forfeit these shares, other one is to collect balance 2 rupees. So what happens if it collect balance 2 rupees? Partly paid shares will become fully paid shares. That means there is no existing partly paid shares in the company. That's why it will become eligible. Next one, what happens if company forfeits the partly paid shares? Now there is no partly paid share in the company. That means again the company is eligible for going for public issue or rights issue. So that is point number 4. Point number 5, it is about firm arrangements. So what is meant by firm arrangement? Say for example, company want to establish a factory. So for establishing this factory, 1000 crores money is required. Okay, now it want to go for IPO in order to raise the money through issue of securities to the public. So for how much amount they can raise finance from public? So it will be 25% only. That means you need to arrange 750 crores on your own. That is through any bank or any other lender like that. And what about balance 250 crores? You can take that money from the public by issuing your securities. So if your requirement is 1000 crores, you can't take 1000 crores from the public by issuing securities. So in the 1000 crore requirement, you need to take 750 crores on your own, not from the public. And what about balance 250 crores? It will be taken from the public. That means from the entire requirement, what should be the firm commitment? That is firm arrangement. It is 75%. Minimum 75% should be firm arrangement form only. And what about balance amount? It will be collected from public. Next one. And what about promoter holding? So what is meant by promoters holding? సో మీకు ఎస్ఎఫ్ఎంలో వచ్చి ఉండాలి మార్కెట్ క్యాపిటలైజేషన్, ఈవెన్ బీవీలో కూడా వస్తుంది. వాట్ ఈస్ మీన్ బై మార్కెట్ క్యాపిటలైజేషన్? నెంబర్ ఆఫ్ షేర్స్ అవుట్ స్టాండింగ్ ఇంటూ market price per share. So then it will become market capitalization. Now this market capitalization is divided into two categories. One is promoter holding, other one is free float market capitalization. గుర్తుంది ఎవరికైనా? ఫ్రీ ఫ్లోట్ మార్కెట్ క్యాపిటలైజేషన్. సో వాట్ ఇస్ ద డిఫరెన్స్ బిట్వీన్ ప్రమోటర్ హోల్డింగ్ అండ్ ఫ్రీ ఫ్లోట్ మార్కెట్ క్యాపిటలైజేషన్? సో అవుట్ ఆఫ్ దిస్ షేర్స్, సో ఫర్ ఎగ్జాంపుల్ there are 1000 shares and market value is 10 rupees. So total market capitalization is 10,000. Now out of 1000, promoters holding is 600 shares. So other than promoters holding is 400 shares. Now here what is promoter holding percentage? 60%. In terms of value, 600 into 10 rupees, that is 6,000. Then what about free float market capitalization, which is nothing but non-promoter holding, 40%, and the value is 4,000. Now I am discussing about promoter holding, not about free float market capitalization. So here the requirement is, if promoter holding is in physical form, that is they are in physical securities form, now they need to convert those physical securities into demat securities. So this is mandatory. Next one, point number 7. Say for example, company want to construct a factory for 1000 crores. So out of 1000 crores, it arranged finance for 750 crores, which is nothing but called as firm arrangements, minimum firm arrangements. And how much amount they can take from the public by issue of securities? 250 crores. Now out of this 250 crores, they want to spend 100 crores for general corporate purpose. What is meant by general corporate purpose? What is meant by general purpose and what is meant by specific purpose? So in this case, if you utilize that money for construction of factory, then it is specific purpose. If you utilize that money as a general expense, not specifically to the construction of the factory, then it will be called as general expense. Now you want to spend 100 crores for general expense. Is it allowed? No, it is not allowed. So maximum amount you can utilize for general purpose is only 25%. So 25% means 250 crores into 25%. So which will come under 62.5 crores. So what about the other portion of the amount? It should be utilized for the purpose for which it was raised. Next one, point number 8. So what happens If the person who is issuing the securities is a willful defaulter like Vijay Mallya or Nirav Modi, then those people are not entitled to go for public issue or rights issue. Other conditions. So what should be the period of subscription which need to be open for subscription to the public? Minimum 3 days, maximum 10 days. And what about the minimum subscription? It is 90%. And what happens if the shares are not allotted? Then refund the entire money within 15 days. So these are the conditions which need to be satisfied in order to make that company as a eligible company to go for public issue or rights issue. So again, I'm repeating, just listen it carefully. First one, what happens if the company or any of its promoter or entire promoter group or directors or selling shareholders in case of OFS are debarred by SEBI from assessing capital market? Then company is not allowed to go for public issue or rights issue. Next one, before going for public issue or right issue, what company need to do? It need to make an application for recognized stock exchange. For how many stock exchanges it can make application? It all depends. ఇండియాలో ఎన్ఎస్సి బిఎస్సి మాత్రమే కాదు, ఈవెన్ హెచ్ఎస్సి కూడా ఉంది. హైదరాబాద్ స్టాక్ ఎక్స్చేంజ్ మీరు పెడితే జిఎస్సి కూడా ఉంటుంది. గుంటూరు స్టాక్ ఎక్స్చేంజ్ ఉంటుందన్న, ఇంకా లేదు. సో now company need to make an application to the recognized stock exchange in order to get approval. Okay, now how many stock exchanges need to give approval? All stock exchanges. Say for example, if company applied for 3 stock exchanges, all the 3 stock exchanges need to give approval. If company applied for 4 stock exchanges, all the 4 stock exchanges need to give approval. If company applied for only 1 stock exchange, that 1 stock exchange need to give approval. Next one. So if stock exchanges are more than one, what to do? Then company need to designate one stock exchange as designated stock exchange. Next one, dematerialization. Now, if you want to issue securities to the public, those securities must be in the form of demat form only, not in physical form. So in order to make them into demat securities, you need to make an agreement with depository bank. So without that agreement, you can't go for public issue or rights issue. Next one, what about the fate of partly paid shares? They need to be forfeited or they need to be made as fully paid shares. Then only company can go for public issue or rights issue. Next one, what about the firm arrangements? So out of entire requirement, at least 75% requirement should be done through firm arrangements. And what about public issue? Balance amount. Next one, what about promoter holding? If it is in physical form, it should be converted into demat form. And what about general corporate purposes? How much amount can be utilized for general purposes? Maximum 25%. And finally, what happens if issuer is a willful defaulter? Issuer or its promoter or its directors. So they are willful defaulters. Now what will happen? That company cannot go for public issue or rights issue. And what about the subscription period? Minimum 3 days, maximum 10 days. And what about minimum subscription? 90%. What happens if a company fails to achieve 90%? If there is any underwriting agreement, then that deficiency will be filled up by underwriters. If there is no underwriting agreement, then the entire issue need to be cancelled and each and every penny which is received by the company need to be returned back. Next one. And what is the time limit for making refund here? 15 days. So everyone doubts on you? Open question number 1. 1000. It is market value only. Next one. No, it is all about IPO. Funds raised through IPO. So out of total funds which are raised from IPO, you need to spend maximum 25%. That means at least 75% should be used for the intended purpose. Open question number 1. And where is Mike? Read question number 1.
What are the eligibility conditions for public issue and rights issues?
Again, what happened? Continue.
An issuer cannot make a public issue or rights issue of equity shares and convertible securities under the following conditions. Debarred if the issuer, any of its promoter, group or directors are debarred from accessing the capital markets by SEBI. Approval for listing.
So wait a minute. Open your notes. Keep a heading. Eligibility for public issue or rights issue. First one, not debarred by SEBI. From what? From assessing capital markets. So who are the people covered here? Issuer, nothing but company. Next one, promoter or group of promoters. Next one, directors. Next one, selling shareholders in case of OFS. So if any of this person got debarred by SEBI from assessing capital market, then that company cannot go for public issue. So make it fast. Also, because even in case of CSR also, there is a clause for general purpose expenditure. So whenever you want to do some activity, you will incur some general expenses also. So those expenses are bound to incurred by the parties. So that is the reason why a limit is given here. What is that limit? It shall not exceed 25%. So that means up to 25% you can spend that money for any purpose which is useful for the purpose of factory in the above example. Next, point number 2. Read point number 2.
Approval for listing. Unless an application is made to one or more stock exchanges for in principle approval of listing of equity shares and convertible securities on such stock exchanges and has chosen one of them as a designated stock exchange.
So approval for listing. So for this purpose, company shall make application to how many stock exchanges? One or more recognized stock exchanges. Next one, approval from all such recognized stock exchanges is required. So one of such recognized stock exchanges shall act like designated stock exchange. And one more point. So in the material, it is mentioned like in principle approval. So what is meant by in principle approval? The amount that can be raised through public offer. That amount will be called as in principle amount. And stock exchange need to give that approval. Say for example, if you want to buy a car, you can take in principle approval letter from the bank. If you want to buy a home, you can take in principle approval from the bank. Say for example, మీకు 20 lakhs లిమిట్ ఇచ్చేస్తారు. ఇప్పుడు మీరు బ్యాంక్ అంటే అదర్ పార్టీ దగ్గరికి వెళ్ళి యూ కెన్ బై ద కార్ ఆర్ యూ కెన్ బై హోమ్ ఆల్సో బై యూజింగ్ దట్ ఇన్ ప్రిన్సిపల్ అమౌంట్. నెక్స్ట్ వన్, పాయింట్ నెంబర్ 3.
In case of an initial public offer, the issuer should make an application for listing in at least one recognized stock exchange having nationwide trading terminals.
Yes, that recognized stock exchange need to have entire nation terminals. So what is the purpose of having terminals over entire nation? In order to do trading.
Dematerialization. Unless it has entered into an agreement with a depository for dematerialization of equity shares and convertible securities already issued or proposed to be issued.
Next one, agreement with which bank? Depository bank. Regarding what? Dematerialization. For existing equity shares or convertible securities, as well as new equity shares or convertible securities. So here I'm not saying to convert physical securities into demat securities. I'm saying to have an agreement to convert physical securities into demat securities. Whether to convert physical securities into demat securities or not, it is up to the shareholder. He will decide. Say for example, I'm having Reliance company physical shares. Now Reliance company need to provide dematerialization facility to all the shareholders. Now, if I want to convert my physical securities into demat securities, I can. Or if I want to keep them as physical securities only, so I can continue with physical securities. It is my option. But in case of promoters, at the time of going to public issue, it is mandatory for them to convert their physical securities into demat securities. So, promoters, what they need to do? Must convert physical securities into dematerialized securities, that is demat securities. And what about other than promoters? For them it is optional. Next, continue.
Partly paid up shares. Unless all existing partly paid up shares of the issuer have either been fully paid up or forfeited.
So what to do in case of partly paid shares? So one option is forfeit them, so that there will be no partly paid share at all, or make them fully paid. So after that only company is eligible to go for public issue or rights issue. Next one.
Firm arrangements. Unless firm arrangements are financed through verifiable means towards 75% of the stated means of finance, excluding the amount to be raised through the proposed public issue or rights issue or through existing identifiable internal accruals have been made.
So existing identifiable internal accruals means cash and cash equivalents. Nothing but existing cash balance, bank balance will be called as internal accruals. రాయని మెటర్లో సెబీ అనేది ఎంత ఇంట్రెస్టింగ్ అయితే ఉంటుందో అంత హారర్ కూడా చూపిస్తుంది. బికాస్ ఆ టర్మ్స్ అర్థం అవ్వవు. మీరు కనుక క్లాస్ ప్రాపర్గా వినకపోయినా, నేను చెప్పినప్పుడు వెంటనే నోట్ చేసుకోకపోయినా ఫ్యూచర్లో చదివేటప్పుడు చాలా ఇబ్బంది పడతారు. అదే టర్మ్స్ తెలిస్తే చాలా ఇంట్రెస్టింగ్గా ఉంటుంది సెబీ. Which point? Firm arrangements. So what is meant by existing identifiable internal accruals? Cash and cash equivalents. Next one. What is meant by finance through verifiable means? Nothing but loans. Loans by the company or loan commitment. Make it as a loan commitment. Loan commitment. Loan commitment. Finance through verifiable means loan commitments. Next one, identifiable internal accruals means cash and cash equivalents. So point number 6. So here you need to take required finance. Required finance. In our example it is 1000 crores. Now out of required finance, 75% of finance should be made through firm arrangements. And what about 25% of finance? It is through public issue or rights issue. ఇందుకు రైట్స్ ఇష్యూ అంటే పబ్లిక్ ప్లేస్మెంటా ప్రైవేట్ ప్లేస్మెంటా ఏదైనా రావచ్చా? సో ఫస్ట్ ఆఫ్ ఆల్, ఫర్ హూమ్ సెబీ రెగ్యులేషన్స్ ఆర్ అప్లికబుల్? లిస్టెడ్ కంపెనీస్. దట్ మీన్స్ ఆల్రెడీ who are the shareholders? Public. When public are the shareholders and you are offering extra shares to the existing shareholders, nothing but public, so it is nothing but public placement only. Indirectly rights issue is nothing but public placement. But instead of offering extra shares to public, you are offering to your existing shareholders who are also a public. So that's why the requirements are common for both the points. Next one.
Unless promoter's holding is in dematerialized form prior to filing of
Yes,
document.
it is covered in point number 4. Promoter must convert physical securities into demat securities. Next one.
The amount for general corporate purposes as mentioned in the objects of the issue in the draft of
So general corporate purpose. General corporate purpose. So how much amount can be utilized for general corporate purpose? It is maximum 25%. So maximum 25% of public issue proceeds. Next one.
a public issue of equity securities if the issuer or any of its promoters or directors is a willful defaulter or other conditions.
So now we are talking about willful defaulters. So what happens if any person is willful defaulter? Not a willful defaulter. So who? Company, that is issuer. Next one, promoters. Next one, directors. If any person is willful defaulter, then the company is not eligible to go for public issue or rights issue. Next one.
Issue issue shall be open for at least 3 days and not more than 10 days.
So subscription period, which is nothing but called as subscription period. So what is meant by subscription period? Nothing but bid opening date, bid opening date to bid closing date. So that time period will be called as subscription period. And the minimum subscription period will be 3 days and maximum 10 days. What is your doubt? So I am discussing about SEBI regulations, not about Companies Act. So in case of Companies Act, what should be the minimum application money? 5% of the face value. But according to SEBI regulations, it is 25% of the issue value. And what about the minimum subscription as per Companies Act? It is not 90%. It is not 95%. It is the wish of company. It is the wish of company. It can decide any amount as minimum subscription according to Companies Act. But according to SEBI regulations, it is 90%. So Companies Act provisions are different and SEBI regulations are different. Next point.
Minimum subscription shall be 90% of the issued size, failing which the application money has to be refunded within 15 days of closure of the issue.
So minimum subscription 90%. Next one. Refund time limit. Refund time limit 15 days. 15 days from the closure of subscription period. So by this we completed question number 1. Hmm. Hmm. Both together. So authorized capital means it is the maximum capital that a company can hold. It may be equity share capital, it may be preference share capital, it may be held by promoters or other than promoters, whatever it may be, the total amount shall not exceed authorized capital. Apply అవుతుంది. For every public offering, the same rules are applicable. Debentures. And it should not be publicly placed debentures. Because if it is publicly placed debentures, it is again nothing but public issue. Next one, question number 2. So question number 2 is about merchant banker and intermediaries. So who is merchant banker? The person who facilitates companies for IPO process or FPO process. So that person will be called as merchant banker. Okay, now a company want to go for either IPO or FPO. Okay, now it want to appoint merchant bankers. How many merchant bankers can be appointed here? One or more than one, both are possible. Now, what happens if more than one merchant banker is appointed? Then out of all merchant bankers, one merchant banker need to become lead banker. Him, Yamavali, lead banker. Next one. And if there is more than one merchant banker, what about the sharing of rights, obligations, responsibilities? It will be predetermined with the help of agreement. Okay. Now appointing merchant bankers is completed. Now what about rest of the procedure? No company, no need to worry. It will be taken care by whom? Merchant bankers. Now he will appoint whom? Intermediaries. Then who are intermediaries here? So registrar. And what is the purpose of appointing registrar? To collect the money. If securities are allotted, to transfer that money to the company. Next one. If securities are not allotted, then to refund that money to the person who paid the money. So this process will be taken care by whom? Registrar. Next one. Compliance officer. So who is compliance officer? So at every stage of IPO or FPO, whether company is following required conditions or not. So who need to check those points? Merchant banker. So now merchant banker will appoint a person called as compliance officer in order to check all those aspects and to make a report to him. So that is the role of compliance officer. Next one. What happens if the issue was made through book building process? Then he need to appoint syndicate members in order to determine the exact price based on the demand levels of the public. Next one. What happens if it is done through other than book building process, that is fixed price method? They can just appoint a banker. Now syndicate members are not required because you already fixed the price. Now there is no role for syndicate members. Now a normal banker will serve the purpose. That means if it is book building process, syndicate members will be appointed. If it is normal process, bankers will be appointed. And who will appoint these people? Merchant banker. Next one. There is one more point which is not covered here. It is about underwriters. So who will appoint underwriters? Merchant banker only. That means merchant banker will take care of each and every process that need to be taken care by company. Now open question number 2. Pass on the mic. Kulski.
Briefly explain the appointment of merchant banker and other intermediaries. The issuer shall appoint one or more merchant bankers and
So issuer, nothing but company. Issuer means for the purpose of this regulation, company. So company can appoint one merchant banker or more than one merchant banker. If more than one merchant banker is appointed, then at least one of them shall act like lead merchant banker. Just like designated stock exchange, here it will be called as lead merchant banker.
and at least one of whom shall be the merchant banker. The issuer should also appoint SEBI registered intermediaries in consultation.
Yes. So registrars, syndicate members, compliance officers, all these people are called as intermediaries and they need to get them registered under SEBI. That's why they are called as SEBI registered intermediaries who need to appoint issuer with the consultation of merchant banker. If it is only one merchant banker, with that merchant banker. If there are more than one merchant banker, with lead merchant banker.
With the lead merchant banker to carry out the obligations relating to the issue. Where the issue is managed by more than one merchant banker, the
Then
rights
their rights, that is nothing but rights of all merchant bankers, obligations, responsibilities, all this will be shared between each and every merchant banker. So for this purpose, they will prepare a predetermined agreement and it will be disclosed in prospectus also. So what the role of each merchant banker will be provided in prospectus.
Rights, obligations, and responsibilities relating to inter alia.
Then what are their rights, obligations, responsibilities? They need to make certain disclosures in prospectus. They need to make allotment in case securities are allotted. They need to make refund if securities are not allotted, and they need to take care of underwriting obligations, nothing but appointing underwriters in order to maintain minimum subscription. So all these things will be shared between whom? All merchant bankers. మరి ఏ మర్చెంట్ బ్యాంకర్ ఏ రోల్ అనేది హూ విల్ డిసైడ్? దే విల్ డిసైడ్, అండ్ those discussions will be form part of prospectus.
To disclosures, allotment, refund, and underwriting obligations, if any, of each merchant banker should be predetermined and disclosed in the offer document.
So here offer document means prospectus. So మనం మార్నింగ్ ఎల్ఐసి ప్రాస్పెక్టస్ చూసాం, అండ్ వీ ఈవెన్ saw certain merchant bankers who is assisting LIC in IPO process.
The issuer shall, in the case of an issue made through the book building process, appoint syndicate members, and in the case of any other issue,
Other issue means fixed price method.
appoint bankers to issue at various centers. The issuer shall appoint a registrar to the issue registered with the board, which has connectivity with all the depositories.
Depositories, nothing but depository bank.
The issuer shall appoint a compliance officer who shall be responsible for monitoring the compliance of the securities laws and for redressal of investors.
Now open notes. Keep a heading: merchant bankers and SEBI registered intermediaries. So company will appoint whom? Merchant bankers. Merchant banker will appoint, yes, intermediaries. So company need to appoint merchant bankers, and merchant banker will appoint intermediaries. Now the point is, how many merchant bankers? One or more than one. And what about intermediaries? Who will be covered here? First one, registrar. Next one, compliance officer. Next one, syndicate members or bankers. So bankers is not a separate point, it is arranged with syndicate members, because in a company there may be syndicate members or bankers. So when syndicate members, when bankers, when it is book built issue, syndicate members; if it is other than book built issue, bankers. Next one, note. Wait చేయండి. Note: in case of multiple merchant bankers, what they need to follow? One merchant banker will act as lead merchant banker. One merchant banker will act as lead merchant banker. Next one, rights or obligations or responsibilities will be shared between them. So by this, question number 2 is also over. So now open question number 3. Other conditions. Nothing but extra conditions that need to be complied by the company in order to go for IPO. So first one. So it is about having net tangible assets. So what is meant by net tangible assets? First of all, what is meant by tangible asset? Which are tangible, like land, building. So all these things will be covered as tangible assets. Okay. Now the company must have minimum 3 crores tangible assets in each of the last 3 years. That means the current year is 2024-25. Now what about 3 financial years, preceding financial years? 2023-24, 22-23, 21-22. Now in each of the 3 financial years, the minimum net tangible assets shall be 3 crores, 3 crores, 3 crores. So what happens? In 1 year it is 1 crore, but in balance 2 years it is 10 crores, 10 crores. It is not eligible. So it is not average rate. It is applicable for each year. For each year, the minimum net tangible assets should be at least 3 crores. For how many years we need to check? For 3 years. And one more requirement. So out of this net tangible assets, what about the portion of monetary assets? It shall not exceed 50%. That means it shall be less than or equal to 50%. It is less than or equal to 50%. So first of all, what is meant by monetary asset? Cash and cash equivalent. That is nothing but monetary asset. Okay. Now, so even cash and cash equivalent is also a tangible asset, but it will be classified as monetary asset. So out of 3 crores tangible assets, how much portion the monetary asset should have? Not exceeding 50%. Sir, what happens if it is more than 50%? Say for example, 3 crores is the tangible asset value, and out of 3 crores, 1.8 crores is in the form of monetary assets. So 1.8 out of 3 means how much percentage? It is 60%. It is more than 50%. Now what to do? So what is the 50% value? 1.5 crore. And what is the extra value? 0.3 crore. Now this 0.3 crore need to be spent for the requirement, that is factory purpose. Now you are going for IPO in order to take 250 crores for factory purpose. So you need to spend this 0.3 crore for factory purpose. In simple words, if you are already having monetary assets, why you need to take money from the public? Simple question. So that's why there should be a maximum limit. What is the maximum limit? 50%. Out of all tangible assets, the monetary asset shall not exceed 50%. If it exceeds 50%, the extra portion need to be spent for intended purpose. Next one. This is about net tangible assets. Now net worth. So what is meant by net worth? You can calculate net worth with 2 formulas. One is paid up capital plus free resource. Other one is total assets minus total liabilities, excluding capital and free resource. Okay. Now for the last 3 years, you must have at least 1 crore net worth. Same. So here for last 3 years there is minimum 3 crores of tangible assets. Similarly, for last 3 years there should be at least 1 crore of net worth. What happens if it is less than 1 crore in 1 year and it is more than 1 crore in balance 2 years? Then that company is not eligible. So when it will become eligible? When it is having at least 1 crore net worth in each of the 3 preceding financial years. So first point is about net tangible assets. Second point is about net worth. In case of net tangible assets, in case of net worth, we need to look at last 3 years figures. So in case of net tangible assets, the minimum amount should be 3 crores. In case of net worth, the minimum amount should be 1 crore. Next one. pre-tax operating profit. First of all, what is meant by operating profit? Profit from operating activities. In simple words, EBIT. EBIT stands for earnings before interest and tax. Okay, that will be called as operating profit. What is meant by pre-tax operating profit? Before tax. EBIT is before tax only. So then, can I call EBIT as pre-tax operating profit? Yes. Now it is about minimum average EBIT. So for the last 3 years, it is not last 3 years also, during last 5 years, you need to select 3 years which are more profitable. And the average EBIT of those 3 years shall be at least 15 crores. So here I am taking average. So each year 15 crores ఉండాలని చెప్పట్లేదు. I'm taking average. So average means year 1 profit plus year 2 profit plus year 3 profit divided by 3. So which 3 years we need to select here? Out of last 5 years, we need to select most profitable years. Okay, let's take an example here. So what is the current financial year? Ansep ఆలోచిస్తారండి. 2024-25. So previous 5 financial years means 23-24, 22-23, 21-22, 20-21, 19-20. That's it, 5 years. Now here the profit is 30 crores. Here it is 20 crores. Here it is 10 crores. So ఇది కరోనా టైం కాబట్టి let's make it as a loss. 50 crores. 50 crores loss. And in 1920 it is 40 crores profit. So this is the figures now. Now how to calculate average EBIT? So out of these 5 years, we need to select 3 years which are more profitable. So which year is more profitable? So it is 1920, first one. Next 30 crores, second one. 20 crores, third one. So now we need to make average. So 40 plus 20 plus 30 divided by 3. How much? 30 crores. Is it more than 15 crores? That means this company is eligible to go for publication. ఏమైనా డౌట్ ఉందా? And last point. Now company changed the name. Why company will change the name? Goodwill. Law is scoring. Audit is scoring. Next one. BV is scoring. So SFM, SCM, DT, CFR, IDT. So they are not scoring subject unless you have extreme interest in those subjects. Extreme interest unte every subject will become a scoring subject. But even though there is no extreme interest, in these 3 subjects you can score more. ఓ పని చేయండి, మూడిట్లో 300 స్కోర్ చేయండి. It will become 300. Then what about balance 5 subjects? Just score 40, 40, 40, 40. So 540s, 200. So you will get 500 out of 800. That means you are a all India ranker. Okay, let's keep this discussion aside. Let's continue. So why company will change the name? Why company will change the name? If there is any change in business activity, then definitely company need to change the name, because every company name will reflect the nature of business. TCS, Tata Consultancy Services, it will reflect the nature of business. Tata Motors. Next one, Reliance Jio. What is the original name for Reliance Jio? Reliance Jio Infocom Limited. Infocom means information and communication. Even that name is reflecting nature of business. So yes, Masterminds, Commerce Institute Private Limited, Commerce Institute. So it is also reflecting nature of business. So every company name need to reflect nature of business. That means if nature of business is changed, then you need to change company name also. అంతేగాని ఇప్పుడు మీరు టీసీఎస్ అని పేరు పెట్టుకున్నారు, టాటా కన్సల్టెన్సీ సర్వీసెస్. నౌ యూ వాంట్ టు సెల్ ట్రాక్టర్స్, బైక్స్. Is this allowed on that name? No, you need to change that name accordingly. Okay. So during last 1 year, if there is any change of name, then the revenue of the last year, so out of that revenue, at least 50% of the revenue should come from new business activity. So నేను చెప్పిన పాయింట్ అర్థమైనా? Say for example, previously it is providing consultancy services. So now it is selling tractors. Okay. Now out of total revenue of that year, at least 50% revenue should come from tractor business, not from consultancy services. Then only you are eligible to go for IPO. So now say total how many conditions we need to satisfy here? 4 conditions. What are those 4 conditions? Net tangible assets condition, net worth condition, minimum average pre-tax operating profits, in simple words EBIT, and finally change of name. So in case of net tangible assets, what is the requirement? For the last 3 years, there must be at least 3 crores of net tangible assets for each year. And so out of total net tangible assets, the monetary assets shall not exceed 50%. What happens if it exceeds 50%? That excess should be utilized for the intended purpose, that is factory purpose. Next one. And what about the net worth? During last 3 years, for each year, the net worth should be at least 1 crore. Then what about EBIT requirement? Now it is not for each year, it is average. So we need to take 5 years here, not 3 years. So out of last 5 years, we need to select 3 most profitable years. And we need to add all those EBITs and we need to make it average. Now that average amount shall be at least 15 crores. Then it will be eligible for IPO. And last one, if there is any change of name in last 1 year, then you need to divide the entire revenue of that year into 2 categories. One is from past business activity, other one is from new business activity. Now out of total revenue, the revenue from new business activity shall be at least 50%. Then only you are eligible for IPO. That means if you satisfy all the 4 conditions, you are eligible for IPO. What happens if any one of these conditions got failed? You are not eligible, but still you will become eligible by following conditions in second point. So if you fail to satisfy any of the above conditions, then also you are eligible to make IPO, but now for you, following book building process will become mandatory. So generally following book building process is not mandatory. You can fix the price of the share, or you can go through book building process. So it is option which is left to the company whether to go for book build process or not. But if you fail to satisfy any of the above conditions and still you want to go for IPO, then you should go only on the basis of book building process. And out of public issue, at least 75% should be given to QIBs only, who are nothing but qualified institutional buyers. సో ఎవరెవరికి ఎంత ఇవ్వాలి అనేది మనం నెక్స్ట్ క్లాస్లో డిస్కస్ చేద్దాం. ఇప్పుడు టైం లేదు కాబట్టి నెక్స్ట్ క్లాస్లో డిస్కస్ చేద్దాం. సో యాజ్ ఆఫ్ నౌ జస్ట్ రిమెంబర్ దిస్ పాయింట్. సో అవుట్ ఆఫ్ టోటల్ పబ్లిక్ ఇష్యూ వాల్యూ, అట్లీస్ట్ 75% value should be given to whom? Qualified institutional buyers only. That means you can't give that money to the individuals because you are not satisfying the above condition. That means you are very riskier. So don't take money from the public when you are a riskier person. So you can take only up to 25%. 75% should be taken from qualified institutional buyers because they will wait. But what about public? So వాళ్ళు వెయిట్ చేయరు, ప్యానిక్ అవుతారు. Next one. And what happens if you fail to give 75% to qualified institutional buyers? Then cancel the entire process, refund full subscription money. That's it. So if you satisfy all these 4 conditions, these points are not applicable. So going only through book build process, giving 75% of the public proceeds only to qualified institutional buyers. So all these points are not applicable if you satisfy all the 4 points which are given here. But if any condition got failed, then you need to follow these conditions. Then only you are eligible to IPO. Next one, balance conditions. Very easy. Convertible debt instrument. Nothing but convertible securities. So can a company issue convertible securities without listing its equity shares? Yes. But there should not be any payment default in last 6 months. So default in paying interest or default in paying principal amount. So there should not be any payment default during last 6 months. Then it can make a public issue of convertible securities, convertible debt instruments. Next one, and one more requirement. So which is about allottees. How many prospective allottees must be there? At least 1000. At least 1000. అంటే ఎంతమందికి అలాట్ చేయాలి పబ్లిక్ ఇష్యూలో? మినిమం 1000. What happens if it is only 900? You can't go for IPO. The number of allottees shall be minimum 1000 in number. Next one. And one more point. So you are having outstanding convertible securities. What is meant by convertible securities? At the time of redemption, you will give equity shares instead of making cash payment. So those kind of securities will be called as outstanding convertible securities. Okay. Now, after IPO, those people will get the shares. So IPO lo meer shares issue chestunaru, fine. But because of existing convertible securities, even those people are also getting shares after IPO, immediately after IPO. Then you can't go for IPO because already you are giving shares to the existing convertible security holders. Then why to issue shares to the public now? You need to wait for certain time period. Next one. So if the issue size is at more than 100 crores, అంటే more than 100 crore వాళ్ళు కనుక డబ్బులు తీసుకుంటే, then the bank or public financial institution which collects money from the public in order to pay that money to the company, they need to monitor and report on quarterly basis regarding what? Regarding the utilization of proceeds. Say for example, I raised 200 crores. Now my bank who collected 200 crores for me, so it need to provide a report to the SEBI. So report about what? Report about utilization of this 200 crores. Say for example, for first quarter I utilized 20 crores. It need to be reported by the bank to the SEBI. Second quarter I utilized 50 crores. It need to be reported to the SEBI. And finally I utilized 130 crores. Need to be reported by the bank to the SEBI. అలా ఎంతవరకు చెప్పాలి? Not 100%, up to 95% of utilization. Bank need to communicate about utilization, report to the SEBI. And finally, the company need to get rating for IPO. So how to get rating for IPO? It will be done by credit rating agency. We already discussed about credit rating agencies in case of deposits. So at the time of accepting deposits from the public or from the members, you need to take credit rating. In case if it is from members, you need to take credit rating at the time of issue. If you want to take deposits from the public, you need to collect credit rating at the time of issue, as well as for every year till the deposit amount is repaid, you need to obtain credit rating from CRS. The same need to be followed by the company who want to go for public issue. They need to take the rating from credit rating agencies and it should be disclosed in the prospectus.